Welcome to an in-depth exploration of the silver market, where recent dynamics suggest the onset of a significant bull run. Silver, often referred to as the poor man's gold, is capturing the attention of market participants as evidenced by its resilience in the face of recent fluctuations. Join us as we analyze key indicators surrounding silver, XAG/USD, to unravel the intricate details that hint at an imminent surge, potentially marking one of the most substantial bullish trends in recent memory. In the latest turn of events, silver has managed to turn the tide by attracting dip buying on a consequential Tuesday, effectively breaking a two-day losing streak. Currently holding its ground in the $23.85 to $23.90 range, the white metal exhibits a commendable 0.3% gain for the day. This resurgence follows a recent recovery from the mid-$22 zeros, a level not witnessed in a month and a clear signal of the market's ability to withstand downward pressures. However, as with any market analysis, the technical landscape is crucial for a comprehensive understanding. The recent rebound, while encouraging, encountered resistance around the 50% Fibonacci retracement level of the downfall from the December swing high. This level, serving as a crucial psychological marker, has yet to see silver find complete acceptance. Adding complexity to the analysis, oscillators on the daily chart, despite recovering from bearish territory, are still in the process of gaining positive traction. This intricacy warrants a note of caution, particularly for aggressive bullish traders eager to capitalize on the upward momentum. The subsequent pullback, though limited, is significant. It allows XAG/USD to maintain its position above the critical 200-day simple moving average SMA, currently positioned around the $23.60 mark. This SMA acts as a key pivotal point of sort of financial equilibrium. Should a convincing break below occur, the stage would be set for a vulnerability test below the $23 level, with the additional threat posed by an ascending trendline support originating from October. As we continue our journey through the intricate world of silver, XAG/USD, it's imperative to address the challenges and opportunities that lay ahead. The technical aspects of this market offer a nuanced perspective, demanding a thorough examination for anyone looking to capitalize on potential gains. The current resilience of XAG/USD is notable, with the white metal managing to hold above the crucial 200-day simple moving average, SMA, positioned near the $23.60 region. This level serves as a linchpin, a key support that, if convincingly breached, could expose the market to sub-$23 levels. Adding further complexity, an ascending trendline support extending from October further emphasizes the significance of maintaining this support. On the upside, the $24 mark emerges as a critical resistance, representing a psychological barrier that silver has struggled to overcome in recent sessions. Beyond this point, the $24.25 to $24.30 region, corresponding to the 50% Fibonacci retracement level, poses a formidable challenge to sustained upward momentum. Aggressive bullish traders should exercise caution, as oscillators on the daily chart, though on a recovery path, are yet to firmly establish positive traction. However, should the bulls manage to breach the resistance and propel XAG/USD beyond $24, a fresh trigger for bullish traders may emerge. The path beyond this point remains dotted with hurdles, including the aforementioned resistance zone and the psychological $25 mark. Further, an intermediate hurdle at $25.25, followed by the $25.45 to $25.50 region, adds layers of complexity to the bullish narrative.
I understand a little bit differently now after taking some time off how difficult it is to stay on top of things. I mean, I told you last week, I said, and again, I'm just a little burnt. I need to take a little bit of time off. And taking a week off, I re-immerse myself and feel as though I'm completely lost. Like, I'm so far behind the eight ball from taking 1 week off. It's taxing. It's mentally taxing to stay on top of everything and try to make heads and tails of everything. I give great credit to people who do what you do, who do what I do, who do what anyone who is trying to stay abreast and stay on top of what's going on and convey it in a semi-articulate fashion. It's very challenging to do so in a world that is as dynamic as it is, and it is mentally challenging. So it's good to be back. It's good to re-immerse myself. One of the things I was a little surprised about was that, yes, the world is still spinning rapidly, but it's also, I was surprised that there hasn't been as much development as I would have expected here leading into the end of the year. Maybe there's a little bit of time left before we see some of these things start to unfold, like, this short-term bank lending, rescue bank lending project that the Federal Reserve came out with. Well, all of these loans, and by the way, it's up to its all-time high, I don't know the exact number, well over $100 billion, but it all comes to an end in March. There's just a few months left before these loans, these emergency loans that were made to the banks in distress, have to be paid back. So things are coming. And I think it's emblematic of when I look at the last 30 years in this industry, the things we've talked about very often have come true. Never when we thought they would, and often much, much further down the line than we thought things would unfold. But when you base your decisions largely upon mathematics and economics and a sprinkling of logic upon it, old school logic at that, they tend to come true. But never when you think, or very, very, very infrequently when you think or how you think, what the catalyst will be. So we'll continue down this same, as I had called it almost 3 years ago with you, a linear progression of events that are unfolding, and you can see them if you look closely. So let's talk about a few of the things that I've seen after re-immersing myself back in the fray, one of which is China and Saudi Arabia. I mean, to me, China and Saudi Arabia really are the key to very much of what I have seen or what I think I see coming. And look, you got more deals that are being struck between the People's Bank of China and the Saudi Central Bank. They just did a 50 billion yuan currency swap. It's an agreement, a swap. Let's talk about what currency swaps really mean. It means that trade can be conducted in local currencies instead of defaulting to the US dollar, instead of using the SWIFT system, as well as many of these countries have developed cross-border payments on something called Project M, as in money, M-Bridge, where these countries are able to trade their cross-border digital currencies amongst one another outside of the SWIFT system. And, it's basically a way for these companies to do business with more favorable loan rates in local currencies rather than if they borrowed money in US dollars, especially with interest rates as high as they are. We're seeing more and more and more of a push for these countries to do trade with one another.
In the final lay of our exploration into the dynamics of silver, XAG/USD, we delve into the prospective milestones that could define a remarkable bull run. The journey ahead for silver traders is laden with critical junctures, each holding the key to unleashing a potential surge in value. As the price of silver lingers around the $23.85, $23.90 range, having broken free from a recent 2-day losing streak, the momentum appears poised for further examination. The market's recent recovery from the mid-$22 zeros, albeit commendable, faces challenges in securing acceptance above the 50% Fibonacci retracement level. The cautious optimism is underscored by oscillators on the daily chart, still on the path to gaining positive traction. Maintaining a crucial position above the 200-day simple moving average, SMA, at $23.60 is paramount for sustaining the upward momentum. A breach below this level would not only jeopardize the current bullish sentiment, but also expose the market to potential tests below $23, with the looming threat of an ascending trendline support originating from October. Conversely, conquering the $24 mark is a significant milestone for the bulls, unlocking a path that includes overcoming resistance at $24.25, $24.30, and the psychological barrier at $25. A sustained breakthrough at these levels could pave the way for an extended rally towards the $25.45, $25.50 region, with the ultimate goal being the $26 neighborhood, a level not seen since May 5 earlier this month. It's essential to approach this analysis with a degree of caution, acknowledging the uncertainties inherent in financial markets. This exploration is not an endorsement of a specific trading strategy or investment decision. Market dynamics are subject to rapid changes, and individual risk tolerance and financial goals should always guide investment choices. This analysis is not investment advice. It is crucial to consult with a qualified financial advisor before making any investment decisions, ensuring alignment with your unique financial situation and goals.
Especially with energy in local currencies, not using the dollar. Along those same lines, we saw Turkey, who has been in the news lately, obviously a little bit with what's going on in the Middle East, but also They were told by the European Union that, no, we're not going to let you in anytime soon, so you might as well look elsewhere. Well, that elsewhere, I believe, will be with the BRICS nations. And you have Russia and Turkey now that are developing what they want to be a gas trading hub in Turkey, where Russia is even talking about laying some more lines under the sea, gas lines, so that it could become Russia's main gas export route for Europe. And these agreements that are being made is emblematic again of logarithmic decay in the value of the dollar, in its trade settlement status, where little by little by little by little we keep chipping away at the dollar hegemony. And Turkey is certainly a country that I believe is moving in that direction. They were turned down by the European Union. They have become less Western friendly, and I think they are moving into this alliance with the BRICS. Venezuela, in and of itself, not such an imposing character, but they just said that they want to be a full-fledged member of the BRICS. You will see that happen. Why will you see that happen? Why would we want Venezuela in the BRICS if you're the BRICS? Well, they currently have 17.5% of the world's total oil reserves. And so you're talking a country that is resource rich. Look at all of the countries that have joined in the BRICS nations. They are all very resource rich. That is the key here. The first countries that will come on board will be those that control trading routes and or are resource rich. Pakistan has formally sought membership in the BRICS. And, here again, little by little by little, these are Western allies in a lot of the stuff that's gone on in the Middle East. We have used the assistance of Pakistan to help us with our endeavors, and now they want to join BRICS. They are finding safety in numbers, these countries, little by little by little. We are seeing more and more of these countries that are making a decision to find the safety in numbers. And you will see this, I think, really start to increase in an exponential fashion, where the first countries who were brave enough to stick up to the Western hegemony, that being Egypt and United Arab Emirates, and of course Iran and Argentina, these countries that are joining the BRICS, they will be the first of many. 27 other countries have formally expressed interest, Nigeria being another. Nigeria just said that we would like to, by the end of 2025, we want to be in the BRICS. You move Nigeria over to the BRICS and you have 80% of all the global oil and 75% of all the gas global reserves, reserves held in the BRICS nations. This is the drive that they are making. And I think this is something that, shouldn't be